Unbelievable times we live in. Bank runs happening in China. Last week, JP Morgan and a bunch of other banks had $81 billion locked up that people couldn't access in their banks happening in Japan. I mean, battles happening all over. It seems like all these countries want to fight each other, right? Unbelievable times. So in these unbelievable times, people, in my humble opinion, should be preparing themselves, saving money, right? Not being excessive, mentally toughening themselves for what's to come. Look, there's a financial crisis on the horizon. You can't have governments spending money. I said this before plenty of times, spending money like they're a child who found their parents' credit card. You can't. There is disaster on the horizon when they do that. They removed the debt ceiling before. Don't worry, we're going to get into some articles. They removed that debt ceiling, and astronomically, the United States debt has just been flying. You can't have that occur in the condition that the world is going to be in over the next decade or two. Because, listen, dollar dominance is on a decline. The world is changing. Everything changes. Change is the only constant. Listen, here's an article from Reuters, right, to give some clarity to what I'm saying. I'm going to let Reuters paint the picture for you right now. It says record debts, high interest rates, climate, the cost of climate, I don't want to say the whole word because then YouTube will go crazy on me. Health and pension spending as populations age, and fractious politics are stoking fears. Here's the important part. Stoking fears of a financial market crisis in big developed economies. These are not the only things that are sparking fears of a financial market crisis. And who is it sparking fear in? Oh, I know you've been watching the big money pull their money out of the banks, pull their money out of risk assets. Well, they're playing a little bit now because there's certain catalysts right now, but that's like how long that lasts. Who knows? Who knows? But they're going into a lot of other safe havens, right? You've seen the articles on all the safe haven buying across the globe, not just in the West, across the globe, which is interesting in my humble opinion. But I get it that certain other countries see the dollar as safe haven in comparison to their own currencies, which are much weaker at the time. And don't get it wrong. The dollar, while stronger than other currencies, is itself still weak. And while those other currencies stand to be greatly diminished and probably will collapse at some point in the next, I say the next 15 to 20 years, probably 10, if everyone keeps on behaving like, undisciplined children, probably the next 10 years. But so they will be greatly diminished. I'm not saying they'll go to zero, but the dollar itself is also greatly weakened, right? But let me continue on here. It says a surge in government borrowing costs has put high debt in the spotlight, with investors demanding increased compensation to hold long-term bonds and policymakers urging caution on public finances. Wait a minute. Well, rewind. What did it say? It says, with investors demanding increased compensation to hold long-term bonds. If that continues, then how do risk assets survive? How do you not have a crisis in risk assets? Because that liquidity is going to come out of them. Then the only time when you have these like big sell-offs and things like that happening in the treasuries markets, the only time it's going to happen is when investors want to force the hand of the governments to up those yields so they can come back, right? But they'll take their money out of there to press the government to raise those yields. They'll go into risk assets for a little bit. You'll see the markets go green for just a little while, right? Everybody gets excited. Yeah, stocks going up, crypto's going up. And, they'll put their money in and get their money taken when all the smart money pulls out of those risk assets and goes back into safe haven assets, guaranteed yield assets, things like that. It says over 80%, this is my humble opinion, over 80% to $10 trillion rise in global debt in the first half of to record a $307 trillion. What did they had a typo here in the first half to a record. Oh, just my misreading. My apologies. to a record $307 trillion came from developed economies. The Institute of International Finance says, listen, well, they continue. I'm going to let them say what I was going to say. The United States, where brinksmanship around a debt limit brought it close to a default. Italy and Britain are of most concern. More than 20 prominent economists, former policymakers, and big investors told Reuters, well, they don't have to worry about a debt limit anyway because they've removed the debt limit. How many years? I don't know. But they've been spending like there's no limit, like they just found their parents' credit card and people don't see what's coming. Let's jump on to something else. Let's jump on to another article here. All right. People can do what they want. It's like we try to, as researchers, as economists, put out the information. I feel a lot of times like we're Utnapishtim. Do you know the story of Utnapishtim? A similar story to Utnapishtim is the story of Noah, right? Utnapishtim in the Gilgamesh saga survived the flood. The only, and Noah survived this flood. And they're telling the people, hey, there's something coming. And a lot of top economists, a lot of us researchers have told the people, hey, listen, something's coming. There's a crisis coming, multiple. And what makes this different than any other time in history is that there's multiple crises coming and people they're not talking about it. It's like they don't care. They're afraid. And that fear, I think it turns their head away to distractions. They willingly want distractions. More home affordability. Let's get to this mortgage information, right? Because everything's A-OK according to the Fed. Everything's A-OK according to the governments, according to all these top people with all these, subscribers and views. Everything's A-OK. You got to get to those gyms. I got a new gym for you. However, this is from Investopedia.com. I'm giving it to you 100% raw from the mind of an individual who's looking at things, and I'm trying to not be under any illusion whatsoever. This is from Investopedia. Homes are so unaffordable. 8% mortgage rate wouldn't make much of a difference. Things are getting really, really hairy. It says, here's some bullet points. First bullet point. If mortgage rates hit 8% for a median price home with a 10% down payment, a household would need at least $7,000 more in income to be able to afford monthly payments. And you know what? I'm seeing, and I'm telling you from personal experience, I was driving around this morning up early and had some things to do. And in this neighborhood, I've never seen so many people trying to sell their houses. You know why? Because they can't afford them anymore. They can't afford them. And these people have been here for a long time. I must have drove past at least 3 houses. And let me tell you something. People are not getting it. If the people, like these houses, some of these houses, they're like $800,000, $1 million. 700,000, 600,000 at the low end. If they're having problems, I'm telling you this to drive a point home. If they're having problems, it's proving the middle class is getting crushed. Where are they moving to? Clearly somewhere where it's more affordable, right? Which indicates what? If they're getting crushed, if the middle class is getting crushed, they're getting crushed down, not up. They can't afford what they have now. Then they have to kind of downgrade a little bit. I would think not living wise, because you can live in peace anywhere. You get what I'm saying? But still, that whole American dream where there's a upper class. I hate to even say that. There's an upper class and there's a middle class and a lower class. No, it's becoming rapidly a two-tier society, right? So, this is not being talked about or spread around. So those people who want to buy a home, or they're coming out of college, they don't know this information. I'm trying to put it out there. Higher rates and fewer homes for sale. Well, first of all, when I saw these homes for sale, I'm saying to myself, who's going to buy them? Listen, I'll keep my eye out. I want to see if they get sold. I really do. And the only thing I can see is other people that are coming from somewhere more expensive coming down a notch to live there. That's all I can see. You get what I'm saying? So what is happening is everything is moving. Everyone is moving downward. That's not everyone, but many people, let me phrase it that way, are moving downward in their trajectory. which is not the way it's supposed to be. It says here, higher rates, fewer homes. Yeah, who's going to buy those? It says have made buying a home more difficult. Fed has raised rates to combat inflation, driving mortgage rates higher, that we know. Current home buyers are reluctant to sell homes, which is another thing. So it shows you that people are being forced to sell. They just can't afford it anymore. They can't afford it anymore. So then this is how you know things are getting bad. This is how you know we're in a depression and not a recession, and there's not a recession coming. I would respect it more if the people would actually say we've been in a recession. I would respect it more. They don't even say that. They say we might see a recession. There's a recession right now. Affordability of living is terrible, and I'm seeing it myself, right? Reluctant to sell homes, like I said, which means that they were forced to do so because they can't afford all their bills, their children going to college, at one time, because things change so rapidly. And they still believe in this traditionalist mind state of, oh, send the kids to college. And I'm not against college degrees. I have a degree myself, although I would have chosen a different path if I wasn't guided down a certain path by my parents. But I can see where they're coming from. However, still, that's going to leave you with all this debt to pay. So now you have this debt to pay, and you had this dream that you grew up with in the 70s, 80s, 90s, early 2000s, where you felt like, well, not the 2000s. I don't know how old those people are now, right? But you grew up and you felt like you wanted to send you wanted your child to have a better future, get this college degree, I don't know, work at a company, build your way up, or maybe own your own company. But now, so you sent them there, you accumulated this debt, you signed on those student loans, you bought them a vehicle, right? Which typically they can't pay in college. So you're paying the insurance, you're paying the monthly, if there's a monthly fee, if you didn't buy that car outright, right? So now you got all this happening and everything else is going up. It's starting to go up. Everything is going up, right? So they're getting crushed. If that's not a crisis, it's a quiet crisis. It says current homeowners. It is like, I can only tell it the way I tell it. This is the exact way I'm feeling. There's nothing fake here. I'm not put on a show. I hate that when I see people do that. So, and then some people come into the videos thinking everyone is like that. Like, no, I'm just here. I'm just communicating like we're having a conversation. Important information. I think should be looked at. It can be survived. That's what I'm saying. This can be remedied. First, we got to spot out the problem. Then we can remedy the problem, right? I've been taking actions. We got to take actions against, control the politicians. That's number one. Reel them back in if the people have the guts to do it. Some of us have been taking lots of actions for years. It's not enough. Not enough of us, right? So take actions and control the politicians. Control your government that's supposed to work for you. Make your power felt. That's another thing. Then self-control is the biggest thing. Excessive spending, excessive chance taking, work towards a better positioning in everything in life, right? So I was telling someone this about basketball. You work towards a high percentage shot. That's like life. This is what I was telling them. Because I was showing somebody how to play some basketball. But it's but basketball, what people don't see, basketball, chess, baseball, these types of sports are like a metaphor for life, where you have to be very strategic and you take your best opportunity possible. You don't shoot from way back there. You don't run and just hurl the ball. No, you do your research, you practice, and you take a high percentage shot. That's what people need to start doing in life. So not a whole lot of excessive risk taking. Be very careful with the capital. Find safe haven. Not advice. I'm not a financial advisor. I'm just talking. I'm just screaming to the air. That's it. But find things where you can protect capital. This is what I think a wise person would do, that you're comfortable with. You will only know that if you take the chance. You don't listen. I'm just talking. I'm not trying to, like, somebody out there that's pessimistic may say, oh, you're lecturing. I'm not lecturing. It's a YouTube channel. I'm just talking. Right. And I'm trying to say things that I think are helpful. Sometimes with all these other extracurriculars that don't get us anywhere, got to put it down and research. Hey, what safe haven that I can put my capital into that I have full control over? Am I comfortable with silver? Am I comfortable with fine art? I'm telling you right now, the housing market, I'm not comfortable with. I don't care what anyone says. I'm not comfortable with it. Used to be a safe haven, you store your capital and you buy a home or something like that you're barely at, you know what I mean? And it just preserves your value. You handle the upkeep on it. I'm not comfortable with homes anymore, but that's just my opinion. Anyway, I need to be able to liquidate that capital fast if I need it. And it's just not because of any problem. It's just in case. I need to know that I have full control over when I can liquidate that value if ever I need to at any time and max it. So you do the research. You see, am I comfortable with silver? Am I comfortable with gold? Am I comfortable with fine art? Some people like crypto as store of value. Am I comfortable with Bitcoin? Something like that. I'm just throwing things out there. You get what I'm saying? But it's up to you to find out about that. What are the ins and outs of it? What are the negatives? What are the positives? Some people don't know that, and I get it. They don't have time. So they're going to these influencers that sometimes can be kind of dangerous. That can be dangerous because some of these influencers, they have a vested interest to sell a product. They're getting money behind the scenes, so I'm always one where I feel that it's best for people to do their own research, right? This is why on any channel I have, I put the article, boom, at least there's a clip of the headline of the article in the video. And I'm hoping that maybe if people have time, because I know some people don't have time, but if they have time, they can go read that article themselves. A little investigate. I'm here to spark a mind, not control a mind. I'm not influenced. That's what influencers do. They control you. Go over here. I go over here. Buy this. Do that. That's an influencer. I'm here to spark a mind and say, hey, look, this is the information I have. And if that mind is sparked by that, they'll go investigate that information. Right. So anyway. So here, Fed's lack of clarity on direction for interest rates. The Fed knows that they crapped the bed. I'm going to tell you right now, they crapped the bed. They did things at the wrong time. They didn't do it fast enough. They didn't do it hard enough. They took too long. They took some pauses. Now things are going to have to be higher for longer. They made a lot of mistakes. Then on top of that, misleading the people was the biggest mistake. Misleading the people, not telling them, hey, we've been in a technical recession. Hey, a lot of people not widely publicizing when you make comments like, hey, more people probably are going to have to lose their jobs. Then that gets wiped from the internet, even though we all heard and read that statement. But we already know that because that's what happens when you raise interest rates and you tighten lending standards, right? Mortgage rates, more of that. Mortgage rates, which surged to 2-decade highs last week, have hurt housing affordability so much that a jump to 8% wouldn't make things significantly worse. According to a Zillow economist, should the average 30-year mortgage rate rise to 8% from its current level of 7.49%, a household would need an income of $114,000 to afford the monthly mortgage payment on a median-priced home, given a 10% down payment, up from $107,000 at the current rate. This is from Nicole Bauchout, senior economist, telling people this. Senior economist at Zillow calculated in an analysis released on Tuesday. Quote, while the idea of an 8% mortgage rate is daunting and more buyers will be priced out at each new milestone. Buyers are already in a tight spot, and the housing market isn't likely to look markedly different with rates above 8%, Bauchout wrote. So just very briefly, I want to just read this headline here from this next article, just the headline, because it speaks for itself and backs up what I've been saying for quite some time. I cover like 2-3 other articles about this. This one is from barons.com. They also covered it, I believe, on Yahoo. It says, living paycheck to paycheck is common, even among those who make more than $100,000. And I say that on some of my other channels and people are, oh, come on, Mick. And I'm like, I'm showing you the article. I don't know where this delusion comes from. I'm showing the article. You can read it. This is from Top Economist. You see, and this is why the people will not understand when many collapses begin. many collapses begin. If the people that are struggling, who knows what adverse effects this can have? What happens when people can't pay their bills anymore? They can't afford proper food anymore. Homelessness rising. What happens then? So these are things you have to take into account. If you're going to be out in the world, right, and you're going to be associating with people, you're going to be trying to conduct business, you have to understand how the money is moving. What money do people have? Do they have money to put out? Are they living well? Why are the people angrier? Oh, because they can't live well anymore. Is the dream alive still? Right? What world are you sending your children out into? Can you buy a property? How are markets moving? Are markets moving more predatorily? Yes, they are. Why are they moving more predatorily? Because people don't have a lot of capital to play around with. Not only that, but some of the players who may not have to worry know that the people don't have a lot of capital to play with. So they must seize the opportunity more voraciously now that they know that the people are going to be more cautious with their money, which means the sharks are even hungrier and are even more ferocious. Things like this are what a strategist takes into account, not just the positive, not just the negative, but a balanced outlook on both, right? And then once again, tightening up that belt, understanding that more stores are going to go bankrupt. I just saw Rite Aid. Rite Aid just filed for Chapter 11 bankruptcy, right? This is going to happen. More stores are going to go bankrupt. Banks are going to collapse, things like that. You saw the bank run with the whole Evergrande thing, which should have happened long ago in China, right? I mean, that has huge implications and ripple effects that will be felt around the world as China has great economic troubles and they're trying to figure things out. There's a lot of United States, Western and European investment in China. They're so overlapped. They're pretty much one entity, really. It's just one entity with multiple heads, and those heads tend to bite each other. That's it. But the investment across the board, the crossover is deep. China's investments into the United States. I mean, how much farmland do they own? You get what I'm saying? Like, they own a lot of things, farmland and commercial property. So these are things that I keep in mind. I'm looking at as we live through a very peculiar age. Simple as that. There was a time everything was super amazing, great. People were making money, and everybody was celebrating. I lived through it. Everybody was celebrating. Things were pretty well priced. Everything was going great. And we said it then. Oh, everything's going great. Now we have to say, hey, wait a minute. There's a balance. Give you the good. Now we got to say, hey, listen, we got to be a little bit careful here. We want to make it through this and thrive through it, not just survive it, thrive through it, because you can. Freight recession. These are the things they're not going to talk about. This is from Yahoo.finance or finance.yahoo.com, and it's titled Freight Recession Unlike Any Other Occurring Right Now. Right now. So you got the banking sector in shambles. Commercial real estate is in shambles. Home buying is in shambles. You have record debt being run up by the government. These are factual things, right? Student loan things going on. If they can even repay that, that's in the trillions, by the way, right? You got that going on. Then you have all of the bankruptcies, the tsunami of bankruptcies going on. I know I'm laying a lot on you, but this is the truth. This is the truth. So let me read this little tidbit here. It says, when capacity tightens and drives up rates, new entrants enter the market, flooding it with capacity and driving down rates. The same carriers that entered the trucking industry to take advantage of high rates are now being forced to take much lower rates to keep their trucks moving. In past cycles, when freight markets softened, we would see a massive surge in capacity. While there have been reductions, it has happened much slower than anticipated. A key reason it has been so slow to churn out capacity is because of the proliferation of freight brokers. In past down cycles, freight brokers would lose a large percentage of their volume as shippers kept to a small number of core carriers in their routing guides. But over the past decade, freight brokerages have positioned themselves in the role as a core carrier, enabling them to maintain load volumes even in down markets. So in this down market, most freight brokerages have maintained a high percentage of load volumes even as rates fall. The loads may not pay much, but brokers are able to supply carriers with loads that pay just enough to cover the monthly truck bill. Carriers may be losing money, but that small amount of cash flow will keep them in the game longer than would be otherwise expected. We're going to stop there. So I appreciate you all being here, and I will see you in the next video.